This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Premiums for ESPO blend crude oil loading from Russia's Kozmino port in late August to early September for delivery into China have held firm as buyers seeking to meet robust demand ignore the threat of increased U.S. tariffs, Ford traders said on Wednesday. Trump on Monday shortened a deadline for Moscow to make progress toward a Ukraine peace deal or face secondary tariffs of 100% in 10 to 12 days. This set the deadline for Russia at August 7 to August 9, while ESPO cargoes loading in September are being traded.
Oil prices fell nearly 1% on Wednesday as investors awaited developments on U.S. President Donald Trump's tighter deadline for Russia to end the war in Ukraine and his tariff threats to countries that trade its oil. The most active Brent crude futures lost 68 cents, or 0.95%, to $71 a barrel by 11:03 GMT, while U.S. West Texas Intermediate crudes slipped by 70 cents, or 1%, to $68.51. The Brent crude September contract that expires on Wednesday was down 69 cents, or 0.95%, at $71.82. Both contracts had settled on Tuesday at their highest since June 20th.
Moving on to the top news in the energy sector.
Britain's energy regulator Ofgem on Wednesday announced a review into how costs are allocated across the energy system, including alternative pricing models for consumers, to better adapt to more renewable energy supply. Britain has a target to largely decarbonise its power sector by 2030, which will mean reducing its reliance on gas-fired power plants and rapidly increasing its renewable power capacity. Less reliance on the price of gas is expected to bring down the variable costs of the energy system, Ofgem said.
Japan's ruling coalition agreed on Wednesday with four major opposition parties to abolish a provisional gasoline tax at the soonest this year, as it gave in to opposition pressure following a major election defeat. In a joint statement, the Liberal Democratic Party-led coalition and the opposition parties said an extraordinary session of Parliament from August 1 would discuss the steps needed to abolish the temporary tax. Japan introduced the additional gasoline tax in the 1970s as a temporary step to fund road building and maintenance. Next, we have the top news in metal markets. Indonesia's coal producers are trapped between the rock of falling exports and a hard place of peaking demand from the nickel smelters that had been driving the fuel's consumption domestically, creating a growth conundrum for the companies. Coal is Indonesia's biggest export earner, making $30.49 billion in 2024, and plunging revenues from the sector would have disproportionately bad effects on the country's commodity-dependent economy, Southeast Asia's biggest. With lower profit margins leading to dropping share prices, coal's woes point to a future of workforce cuts, slowing output and fewer contributions to government coffers at a time when President Prabowo Subianto is starting up ambitious spending plans.
Gold prices inched higher on Wednesday, helped by a slight pullback in the dollar as investors awaited the Federal Reserve's policy decision and comments that could offer more cues on the timing of the U.S. central bank's next moves. Spot gold was up 0.1% at $3,328.15 per ounce, as of 10:56 GMT. U.S. gold futures edged 0.1% higher to $3,325.10. The dollar index eased 0.1% after hitting more than a one-month high on Tuesday, making gold less expensive for holders of other currencies.
We will now look at the top news in the agricultural sector.
Japan's rice imports by private companies surged in the first half of this year to total 40 times more than the amount for all of 2024 due to strong demand for alternatives to expensive homegrown rice, Finance Ministry data showed on Wednesday. Companies including trading firms and wholesalers imported some 40,605 metric tons of staple rice despite the steep tariffs Japan imposes to protect its market, the data showed. More than 70% was from the United States. Japan imposes a levy of 341 yen, $2.30, per kilogram of rice beyond the tariff-free quota of 770,000 tons agreed under a World Trade Organization minimum access framework. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.